All right, everyone, welcome back. Today we're looking at something important and something that adds meaningful context to Strategy's announcement from December 1st. Phong, the CEO of Strategy, sat down for an interview yesterday, and in just a few minutes, he reinforced and clarified key points about the company's model, its balance sheet, its dividend philosophy, and the role of the new USD reserve. This wasn't designed to move the stock. It was a clear and measured explanation of how Strategy thinks about short-term obligations, long-term Bitcoin accumulation, capital markets, and the overall operating framework. So, in this video, we're going to break down the most important takeaways from that interview, how they support the announcement earlier this week, and why they help answer some of the lingering questions around Strategy's model. Like and subscribe, and remember, this is not financial advice. All right, let's get into it. The interview opened with the question everyone is asking. If Bitcoin is the treasury strategy, why build a USD reserve? Why hold what was once called a melting ice cube? Phong gave the cleanest answer we've heard yet. He said, "We hold Bitcoin for the long term. We hold US dollars for our short-term obligations. Bitcoin is the global reserve digital asset. US dollars are the global reserve digital currency." This is the structure in one sentence. Bitcoin is the long-duration store of value on the balance sheet. The US dollar is the settlement layer for short-duration liabilities, specifically preferred dividends and interest payments. The reserve doesn't compete with Bitcoin. It protects Bitcoin. This buffer exists, so Strategy never has to sell Bitcoin at the wrong time and never has to issue equity reactively during market stress. It is not a shift in the thesis. It is the infrastructure that allows the thesis to operate across cycles. Next, the interviewer asked a question that's been circulating for weeks. Would you ever suspend the preferred dividend? Fong's answer was clear and direct. Companies suspend dividends, but doing so creates fear, uncertainty, and doubt. Preserving the dividend is the right thing for our shareholders and for the Bitcoin asset class. This matters. Strategy understands that the dividend is more than a coupon. It is a trust mechanism for preferred holders, for equity holders, and for the broader Bitcoin ecosystem. Suspending it would destabilize confidence. Maintaining it strengthens the capital structure. The reserve exists so that suspension becomes unnecessary. Phong then addressed one of the most persistent misconceptions. We are not highly leveraged. And then he laid out the numbers. Convertible debt leverage, 12%, including preferreds, 27%. Typical US public company, 60 to 80%. Some sectors, 200 to 300%. This is critical context. Strategy's leverage is not just not high. It is low relative to the entire public company landscape. This is a conservative balance sheet with a long-duration asset at the center, not a margin-fueled speculative structure. One of the most important moments in the interview was this. In 8.5 days, we issued equity to cover 21 months of payments. This single sentence eliminates several narratives at once. Strategy can raise capital quickly. They have real market access. They were not forced sellers of anything. Demand for their equity remains healthy. Building a reserve was a choice, not an emergency reaction. 8.5 days of issuance created nearly 2 years of predictability. That's structural strength, not weakness. Phong addressed another widely misunderstood metric. On the back end, we had 74 years of dividends in our Bitcoin. This is not a strategy. It is not a plan. It is not a roadmap. It is a capacity illustration, showing the size of the Bitcoin reserve relative to obligations. Intent and capacity are two different things. Strategy has no intention of selling Bitcoin. The point was to show the balance sheet's depth. The interviewer pressed for clarity. When would selling Bitcoin ever be necessary? Fong's answer, if we can grow cash reserves to cover 2 to 3 years of dividends, then realistically, we will not need to sell Bitcoin. This is the clearest statement yet of their internal hierarchy. Use USD reserve. Use equity when the premium is favorable. Use derivatives if needed. Sell Bitcoin only as a last resort, years into the future. The reserve makes option 4 significantly less likely. The interviewer asked whether this was just a short-term shield. Phong answered, "We will maintain a 2 to 3 year cash reserve for the next 5 to 10 years and reassess. This tells us the reserve is part of the long-term operating model. It will scale with preferred issuance. It is meant to operate across cycles. It is not a temporary fix. This is how a Bitcoin-backed credit institution stabilizes its structure. Next, Phong addressed a growing narrative driven by MSCI that Strategy is a digital asset fund that should be excluded from indices. Phong responded directly, "We are a vertically integrated Bitcoin operating company." He elaborated, "They issue securities, they produce operating income, they employ engineers, finance staff, and legal teams. They integrate Bitcoin into a full corporate model. They are not a wrapper, they are not an ETF, they are not a closed-ended fund." This clarification is important for institutional investors, index inclusion, and classification debates. Fong's point was simple. If you want a fund, buy Bitcoin. Strategy is a company. The interview ended with a question many people glossed over, but it may be one of the most important forward-looking signals. When asked about Bitcoin lending, Phong explained that Strategy has deliberately avoided the crypto-native lending markets. No offshore lenders, no opaque counterparties, no exposure to the structures that failed in 2022. But then he said this: once traditional US banks enter the space, real banks, with strong balance sheets, offering custody and lending services, that's something we would consider and something we'd be enthusiastic about. This reveals a lot. Strategy expects regulated Bitcoin lending to emerge. They plan to participate once it is institutionally safe. They may become one of the largest corporate clients in that future market. This could unlock new ways to generate yield or secure financing. This isn't happening today, but Fong's language tells you the company is watching the next phase of Bitcoin financialization and preparing for it. It was subtle but significant. When you put all the pieces together, Fong's interview clarified the strategy model more clearly than anything we've heard this year. Bitcoin remains the long-term treasury asset. USD is the short-term settlement layer. The reserve strengthens. The model, dividends are staying. Leverage is low, capital markets access is strong. Selling Bitcoin is extremely unlikely. The reserve is long-term strategy, is not a fund. And Bitcoin lending through real banks is on the horizon. This is not a company improvising month to month. This is a long-duration model being refined as the Bitcoin economy itself matures. If you found this breakdown helpful, like the video, subscribe to the channel, and leave a comment below with your thoughts. Thanks for watching, and I'll see you in the next one. And for those of you still here, here is the full interview.
Phong, it's great to have you with us. Let's rewind a little bit to the summer of 2020. It was the depths of the pandemic. Michael Saylor came out and started buying Bitcoin basically because he was worried about the debasement of the dollar. He also said at the time that the company's board viewed the company's cash reserves as a, quote, melting ice cube. Fast forward 5 years, now Strategy has set up a dollar reserve. So my first question is, why buy ice cubes?
Well, you know, we have long-term strategy, which is to buy and hold Bitcoin. It's our primary treasury reserve asset. And we have short-term dollar obligations that are created because of the dividends we have on our preferred notes. And we want to maintain and create more Bitcoin yield, Bitcoin per share. And we really don't want to have to utilize that Bitcoin at times when our equity value goes below 1x MNAV. So we said, well, if we want to really create a bulletproof balance sheet, let's have the global reserve digital asset, which is Bitcoin for the long term, and the global reserve digital currency for the short term. And so that's why I created a US dollar reserve to pay down our dividends in the short term in the case that we need it. And we thought that just makes our balance sheet even stronger than it has been in the past.
Well, we certainly understand needing to pay back the debt. That certainly makes sense. But on the dividend, why are you so committed to paying this dividend? Would you ever consider suspending it? Companies do suspend dividends from time to time.
Yeah, companies do suspend the dividend, but it creates fear, uncertainty, doubt in our preferred shareholders, which will impact our convertible shareholders, which will impact our equity shareholders. So I think preserving the payment of the dividend, even if our board has the rights to suspend it, it's the right thing for the short term, for the next 1, 2, 3 years. And it's important. It's also important for the Bitcoin asset class. And we realize we play a role bigger than just strategy in the Bitcoin world.
So would you say investors should think you will never suspend that dividend?
Never say never, Jim. But yeah, our objective is to pay the dividend into perpetuity.
I hear what you're saying, and you described that cascade, the daisy chain here when it comes to all the different equity and debt holders. I am curious. You said last week that selling Bitcoin would be a quote last resort. How should we think about how you would prioritize dividend payments versus tapping that last resort of potentially selling some of your Bitcoin holdings?
Yeah, what we did in the last couple of weeks was to address, I think, some of the misconceptions around strategy. And I do think some of the price action in Bitcoin could have been related to the concerns around our company. Here's misconception number one: we're highly levered. We have 12% leverage. If you add in our preferreds, it's 27% leverage. A typical company that's public in the U.S. has 60 to 80% leverage. A highly levered company is 2 to 3x, 200 to 300x leverage. We're not even close to those levels. That was misconception number one. Misconception number two is that we're not able to pay down our dividends using our balance sheet. And I get the concern around our ability to issue equity. Look, in 8.5 days, we issued $1.44 billion of equity. In 8.5 days, we issued enough equity to cover 21 months. And then on the back end of that, we have 74 years of dividends in our Bitcoin. So we've addressed sort of this sort of concern around us selling Bitcoin. Now, if we are able to grow our cash dividends, that cash reserve, to call it 2 or 3 years of dividends, we're really talking about the end of 2028, right. January 2029, where we might have to consider, do we have to sell Bitcoin? We would if we had to pay our dividends, but realistically, I don't think we're going to be in that situation now that we've built up the cash reserve.
Well, Phong, you talk about growing the cash reserves that you've built out. Is this something that you plan to maintain forever in perpetuity, or is this just something to get you through this period where the broader market is under pressure?
I think we'll try to maintain a 2 to 3 year cash reserve equal to 2 to 3 years of our dividends, which will grow as we issue more preferreds. And it is something that I think we'll do for the next 5, 10 years, and we'll reassess it.
The MNAV, how do you get that back up? How do you get that higher?
We had the same thing happen. Some folks have been in our securities for the last year. Some have been in it the last 5 years. Some have been in it for 30 years. Those who've been in it for 5 years have seen this happen before, right? And during crypto winter in 2022, our MNAV compressed to similar levels. And everyone thought that was the end of strategy. Everybody thought it was the end of Bitcoin. And you've seen it expand to 2 to 3x. I think there's a big misconception about what we are as a company, right? People think that we're a closed-ended fund, we're an ETF, and therefore we should trade at 1x MNAV. The MSCI thinks we're a closed-ended fund and we're an ETF, therefore we shouldn't be on, potentially shouldn't be, part of their indices. We're not. We're an operating company. Right. We're an operating company, a fully integrated, vertically integrated Bitcoin operating company. The only thing we don't do is we don't mine Bitcoin, but we buy Bitcoin, we issue securities, we create products, and we create operating income, and we have employees, we have staff, we have finance people, we have attorneys, we have engineers. Like, we're a fully operational Bitcoin treasury company. And right. So in that case, we should trade at some premium equal to the ability for us to grow our treasury and our operating income over time.
Yeah, go ahead, Katie.
I was just going to ask, you mentioned there's this misconception about what strategy is, what the company actually is. And it's interesting to hear you say that, because you think about what MSCI is asking right now. In mid-October, it said basically that digital asset treasury companies maybe more closely resemble investment funds rather than traditional companies. Investment funds, of course, aren't allowed in their indices, and they proposed actually excluding DATs from their indices. So to that point, have you engaged with MSCI on that, what strategy actually is?
We're beginning the education process, and a lot of our supporters and others in the industry have too. And I don't think this is really a topic for significant debate, either from an optics or a legal perspective. We're an operating company, right? If you want a fund, go buy IBIT, which is a great option. Go buy underlying Bitcoin. That's not what we purport to be, not what we look like, how we operate at all. And so I think there's an education process. I also don't think it's a great idea to pick and choose winners and losers, right? There are many other operating companies that capitalize on assets like oil or gold or airplanes or hotels. And to tell an industry that your asset doesn't count, right? That if you have more than 50% of your assets in any particular asset, Bitcoin, versus more than 50% of your assets in hotels, it just seems like someone's picking winners and losers out there, and that's not really what indices should be doing.
Phong, to switch gears just a little bit in terms of other types of businesses that Strategy could be involved with, lending of Bitcoin. It reached a record high in the third quarter. Why hasn't Strategy gotten involved?
Yeah, we run a very simple business, right? I've been doing this for 10 years now, 5 years with Bitcoin. We buy and we hold Bitcoin. I do think over the course of the next year, and I'm quite excited about it, traditional finance entering the Bitcoin world. Companies have made announcements, Citibank, Morgan Stanley, and others, big real banks are going to offer custody service, lending service, and staking and otherwise. I think when they enter that space and we have different counterparties, it's something we would consider, and I think would be enthusiastic about.
Well, to that point, Phong, I mean, have you held any preliminary talks with lending platforms or other potential partners to handle those logistics?
We've had a lot of constructive discussions. They've primarily been of the, hey, we're thinking about offering Bitcoin services, custody, exchange, lending, et cetera. You're the largest corporate holder of Bitcoin in the world. What's your advice to us? And can we work together? And to the extent they're large, U.S.-based banks that have a lot of history and a strong balance sheet, we're very excited to partner with them.